Hello and welcome to the channel. Today we'll be reviewing PSC, which is Principal's U.S. Small Cap ETF. But before we do that, let me get the disclaimers out of the way. I am not an investment professional. This is not investment advice. This is for entertainment purposes only. If you are thinking of investing, please seek out a investment professional before you make any financial decisions. Okay, with that out of the way, let's hop back into the review. So, like I said, today we're going to be reviewing PSC's Principal Small Cap ETF. And why are we reviewing a small cap ETF? Everything's large cap. Everything, the money's in large cap. Conventional wisdom, if you're on your fire journey or you're just a buy and hold investor, is to buy the whole market, buy VTI and chill. Or maybe you want uh, more focused exposure. So maybe you'll do VU at 90% and do 5% VB, and which is the small cap, uh, Vanguard's small cap ETF, and then do 5% VO, which is Vanguard's mid cap. I think that that is a perfectly reasonable way to do it. But if it's not giving you the returns that you want, if you're looking for something that has a little methodology behind it, this ETF PSC may be something you're interested in. Okay, so let's dive in. So as you can see, the year-to-date performance is almost 13.39, almost 13.4%, which is pretty good. The S&P 500 in 2025 did 18%, if I'm not mistaken. So it's below the large caps, but conventional wisdom says that historically, small and mid cap outperform large cap. That has been the case over time. Now, I have a thesis on this. Once upon a time, a company would uh, perhaps a regional company would grow a little bit and then they would IPO, meaning they would go public. And, if they were a good company, they would continue to grow. They would go through the small cap, they would go through the mid cap, and then they would hit the S&P 500 if they were a true unicorn. One of the things we're seeing in private equity and in VC is that companies stay private longer. So back in the day, you would have a McDonald's. It would go small cap, mid cap, and then large cap, right? I'm just using that as an example. But to use a different example, like a modern day example, you have a company like OpenAI, which is not going to go through the normal small cap, mid cap, large cap uh, trajectory. They're not going to walk down that path. When they IPO, they're already going to be a large cap and by some definitions, a mega cap. Look at them. Look at when SpaceX goes public, it's going to be $1 trillion company. So some of that traditional wisdom may not hold true, but there's still lots of value to be had in small and mid cap. Perhaps the old maxims will hold true, perhaps they won't. But it's always better to have that, have an iron in the fire. If some unicorn does appear, you can get after. I mean, you can get some of the benefits. So just taking a look at PSC, as you can see, it has a 5-star Morningstar rating. Its highlights, we'll go over its highlights and then we'll take an actual look at the prospectus. So the highlights say that it combines multiple factors for diversification benefits and long-term growth. Select Selects stocks with attractive quality, momentum, and value factor exposures that have historically been strong drivers of returns. Portfolio selection and construction processes helps avoid fundamentally distressed small cap companies. Active rules-based frameworks help ensure a consistent approach is implemented through different market cycles. And I really do appreciate that. That's kind of speaks to me, especially when I'm thinking about small cap, because there are zombie companies. There are lots and lots of zombie companies in the small cap and the large cap. They're not a lot of the indexes. that they may follow, like VB and VO, they don't have as many filters, and you will catch some zombie companies. These are companies that are going nowhere. They simply exist to pay shareholders, but they're not going to grow. Even if even if they shrink, the people who already have large amounts of it aren't going to bail because, it's still paying them. It's still something to do. They can get a loan from a bank to stay afloat. They may have a good year that not reignites interest, but they're not going anywhere. And as a growth and income investor, I need you to go somewhere. I need my investments to grow. So factor, the quality and the value factors help weed out zombie companies and companies that are overpriced. And the momentum factor helps ensure that the price is moving. Now, momentum is a double-edged sword. You could be moving up and you could be moving down, but luckily, for our purposes, this fund weeds out the ones that are moving down. Now, let's take one more thing that this ETF is going to be slightly more expensive than a straight up index because you are getting active management and you're getting these filters. It actually uses quants in order to achieve this, but you're looking at about a 0.3%, and that is higher than a typical Vanguard ETF. Now, let's take a look at the prospectus. So I'll start right here. Well, I'll start right here because it's important to understand how they're defining small cap. As of September 30th, 2025, the market capitalization range of the companies in the Russell 2000 index was between 22.4 million and $25 billion. So that's a pretty big spread, but this is their investable universe, right? And it's important. Now let's dive into their actual strategy. For security selection and portfolio construction, Principal Global Investors uses a proprietary quantitative model designed to identify and rank equity securities, including growth and value stock of small capitalization companies in the Russell 2000 index that PGI believes displays value characteristics, companies with low share prices relative to their fundamental value, higher quality companies that possess higher quality characteristics relative to their peers measured by profitability, earnings, quality balance sheets, strength, and solvency, and higher momentum companies that have share prices and earnings that are trending upwards. In weighting securities, the model first weighs the preceding three characteristics approximately equal, and then seeks to assign greater weight to securities that PGI determines are more liquid, meaning the securities that would be the easiest to trade without significantly impacting their value based on recent average trading volumes, and less volatile, meaning the share price of the security has a lower degree of fluctuation over time. What does all that mean? It means exactly what it said in the previous on the website, that they are screening for things and screening for profitability, so your index isn't chock full of zombie companies is important. And that's why you have a higher expense ratio. And they trade quite a bit. If a company isn't performing, they will get rid of them. I think on the website you can see their turnover rate, and I think it's close to 80%. Um, Holdings, yeah, turnover ratio is 80.3%. You may say that's high, and me personally, I have no problem with a high turnover ratio, especially in the small and mid cap world, because these companies will start moving, then they'll stop, or they'll pay out some huge amount to their CEO because their CEO's compensation package is performance based. And if the stock goes up, then he gets even more. That's one way to run a company. That's how some small caps are run because they can't afford to compensate a top quality CEO with cash, so they compensate him with stock. But I don't want that. What I want is that stock price to grow. Don't give him stock. Buy back stock with the money that you were going to give him. Um, That's just my approach to it. But I do want them switching out companies that are not performing. I want you seeking that performance, and an 80% turnover ratio is a sign that they are seeking that performance. That the active management, that 0.3% management fee I'm paying, is performing. So let's talk about why PSC may fit into your portfolio better than a VO and a VB, right? So if you come over here to ETF Research Center, this is VB. This is Vanguard Small Cap ETF. Now let's actually look at how the fund is broken down. Remember, this is the small cap ETF. 40%, 42.9% of this ETF is in large cap companies. 43% is in mid cap companies, and 4% is actually in small cap. So you're not really getting the exposure that you think you're getting to small caps by going with VB, right? You're getting large cap, you're getting mid cap, and you're getting some small cap exposure. Now let's look at VO, which is their mid cap ETF. With the mid cap ETF, you're getting 96% large cap, 8% mid cap, and no small cap. So if your goal is to get that direct exposure to to mid and small cap exposure, true true mid and small cap exposure, you're not really getting it with these two funds. But if you look at PSC, you're actually getting the exposure that you're paying for, right? So you're getting 79% mid cap, 23% small cap, and just 8% large cap as defined by ETF Research Center. So I think that this is a excellent ETF if you're trying to get if you're trying to get real exposure to mid and small cap, not just in name, but actually in valuation, and you're looking for an ETF that has some quality filters, that they're not just blindly following an index, they're actually screening it on a rules-based program to try to find those companies that are going to move. Now, let's go over to Seeking Alpha and find out if their strategy is working. So you can see PSC in violet, you can see VB in blue, and VOO in orange. I'm going to go ahead and turn on total return. Not that it's going to change much because, yeah. As you can see, over the past year, PSC has given back 13%, right? And the mid caps have given back 10, and the small cap has given back 10, and the mid cap has given back 12. If you go to the 3 year, the spreads narrow a tad bit, but PSC has given back 52, VB has given back 49, and VO which is the mid cap, Vanguard's mid cap ETF, has given back 51. And at the 5 year, it really starts to separate it, and that has to do with the compounding capability. Their method is really working. So I think that what you're seeing is that the strategy is working. The is working, and that's important. Now, because we're so early in the year, as you can see, it's only the 3rd of January, 2026. Um, so that's this chart, if I go year to date, this chart represents 3 days. And in 3 days, VB is winning, but this information is kind of useless. You need at least a quarter before you can start making decisions. So where might this fit into your portfolio? If you are confused about the world of mid and small caps because they're not household names, PSC will give you direct exposure to mid and small caps. It'll filter them out for value, for growth, for momentum. It'll apply those filters and try to find you the best companies, and they'll kick out the companies who are not performing well. I really like that idea. It does cost a bit more, as I said, I think I said 3%. It's 3.8, closer to 4. But it's been outperforming its peers enough to make up for that higher expense ratio. You are getting value to your money. Now, in my portfolios, I do small cap at no more than 10%. So anything less than 10% until market conditions change, I don't really hold more than 10%. I think right now in my portfolio, I actually own this ETF and it's probably sitting at 5%. I might move it to 7% depending on how this year develops. And before I close out, let's take a look. There's something that I want to show you. So if you go with VTI, which is the entire ooh, VTI, which is the entire US stock market, and you're going to get every stock that exists, the zombie stocks, the mid cap, the large cap, but because it's market cap weighted, you're getting 92% large cap, just 5% mid cap, and 1% small cap. As you saw in PSC, you're getting real exposure to mid cap, significant exposure, almost 80% mid cap, 20% small cap. You're getting real exposure to that market and real benefits if that market takes off. Okay. So this is my review of PSC. Let me know what you think. Like and subscribe. Leave a comment if you're considering getting into the mid and small cap world. And have a blessed day.